this fund was created under very different circumstances under the Obama administration. And since then, we've seen the U.S. pull out of the Paris Climate Agreement while China has been doubling down. So what does this mean for the investment landscape in the U.S. and China?
So first of all, let me say a little bit about what the U.S. China Green Fund is doing. It is a cross-border fund that was established in October of 2016 to address environmental problems in China. So our focus is how do we clean up and how do we improve the environment in China? And the focus has been on two parts. Initially, we've created a private equity firm in China that does investments in technologies in companies that don't necessarily look green on the surface, but it's the underlying strategy as we invest in companies that have deep access into environmental markets in China, building management companies, distribution companies, sales companies, so that we have the ability to understand what the markets are in China, to understand how to get access to the markets in China. And then the second phase is to invest in technology companies in the U.S. that can address those markets in China. We aren't big fans of the tariffs, but at this point, there are lots of risks in venture capital and investing, and we just consider that one of the risks that we need to deal with.
So why start a fund here in the U.S.? What sorts of technologies in particular are you looking for here?
So first of all, just to clarify, the current fund is a China-based fund. It's an RMB-denominated fund. We are now beginning to roll out the U.S. side of the fund, and it's going to consist of two parts. First of all, we can already make investments in Western companies out of our RMB fund. We can help establish Chinese entities of U.S. companies so that they can tap into the China market. So we're actively doing that already, and we have made one investment, and we're continuing to look at other investments out of our RMB fund. But we do believe we want to start a dollar fund as well so that we can do direct investments into U.S. companies in the clean tech space.
I mean, clean tech focused funds really suffered during the dot-com bubble, and even in more recent years, we've seen venture capital investments really decline pretty significantly. So how are you going to get LPs, limited partners, to invest in this USD fund?
So first of all, we hope to show them that we have a very unique situation going in China, and we're making incredibly good progress on the China side. I'm very familiar with Clean Tech 1.0 and some of the mistakes that were made. A lot of it was based on expectations of high oil prices, not understanding or not being aware of the low-cost natural gas. So those are some of the problems with Clean Tech 1.0. We're going at it, first of all, China is the biggest market for clean tech type products, clean tech energy, and also clean tech in the home. So one, a big market. Second of all, we are very much market focused on the types of investments, and through our understanding and our investments in the China side, we know what those markets are. Third, we're focused on deployment. We are focused on getting these products into the market fast within 1 or 2 years. And then finally, we are also
So the goal here is really to help these U.S. companies access the Chinese market, which does also hit at one of the primary concerns of the current administration, though it's very appealing for these businesses to access that market. So how are you going to protect these companies from intellectual property concerns?
Okay, that's one of the questions most U.S. companies are concerned about when they go into China. One is that we will be a trusted advisor and help these companies navigate the China issues. We have a team of 40 people now in China with a wide range of experience, many of them trained in Western companies, in Western businesses. So we have lots of experience on the ground. We also have an understanding about what types of technologies are best protected in China, which ones are most difficult to protect in China. For example, if a company doesn't file intellectual property in China, it's really hard for them to argue that that they don't have intellectual property protection. So advising startup companies here in California and elsewhere to make sure that a China IP strategy is a big part of what they do is important.
Now, the past few decades of economic growth in China have come at the expense of the environment in some instances, and now China has been very aggressive in rolling out these environmental policies, including shutting down some of these most polluting industries. Right. But is it enough to reverse the damage?
You've got to start somewhere. If you looked at LA back in the 60s, or if you looked at London in the last century, you've probably all seen pictures of terrible pollution. So yes, you have to start sometime, and I've already seen significant improvements in the air quality in Beijing, and we expect that not all of it will be corrected, but we think that it will be much, much better.